should investor be positioned for this kind of market condition, and should investor be switching away from the risk asset?
Risk assets wise, I would say for investments, you always have to take risks in order to make returns. So risk assets is always something that is our bread and butter. We have to take those risks if we want to generate returns. Now, the way I would think about it is how to take the risk in a calculated way that actually increases your chance of success. So I would say that a turn in the interest rate cycle was something that I'll be looking at in the short to medium term. Associated with that is a reason why interest rates were to come down. So let me paint two scenarios. The first scenario is if interest rates come down because the Federal Reserve feels that they are successful in fighting inflation, and therefore they need to normalize interest rates to a lower level compared to 5.5% right now. They are still in a high for longer environment. It's just that they are not back into the 0% interest rates anymore. Even at a 3% handle, there is still a high for longer environment. Now, in that environment, that means the GDP will still be trending, having trend growth, and that will be an environment in which risk assets will do well. So that's scenario number one. Scenario number two is more sinister. The reason why interest rates come down is because there is imminent recession, and the Federal Reserve is forced to act and cut interest rates a lot more aggressively. In that environment, it is bad for risk assets. So we have to be very nimble and really figure out the prevailing conditions around why interest rates are coming down next year, if they ever are to come down. This is my expectation, but the reason for them coming down is very important for on whether we should take more risk with risk assets or whether we should be more cautious with risk taking.